Guys, today I'm going to share with you the most powerful, most effective, easy to use indicator I've ever come across. Surely, I've been trading for almost 7 years, but this indicator has really changed things around. It has been a game changer. It combines the fair value gap, demand and supply zones, and major resistance levels to come up with one single zone which is very powerful. These zones are referred to as trigger zones. We use this indicator in conjunction with a T-line to increase its win rate. Its win rate right now, it's almost 81%. So guys, let's jump straight in and I show you how we set up this indicator, how we use it to find trades, and how we use it in conjunction with the T-line. Before we do that, don't forget to subscribe, hit the like button, because it helps out our team to continue providing free content on YouTube. So guys, after installing the indicator, this is the interface. This is what we will be seeing. You can see we have the red zone, we have white zones, we have pink zones, we have gray, and we have the green. But what we shall be focusing on, it's the red and the green zones. Those are the major zones. We shall be focusing on the red and the green. Those are our major zones. And it doesn't mean that this indicator will be drawing the green or the red zones always. No. So if we flip on this other next chart, this is the GDP USD. As you can see, we have the red zones, we don't have the green, which is okay, meaning we shall only be selling when price reaches these zones. If we flip to the next chart, this is New Zealand GDP. As you can see, we don't have the major zones, we don't have the green or the red zones, meaning we shall be sitting on the sidelines to wait for our zones to be drawn. So here it means we don't have any trade. Let's flip to this other chart. This is GDP. This is Euro GDP. You can see we have the green. We have the green, we have and the red zones. Means here we shall be selling, here we shall be buying. So guys, right now the quick question is, how do we trade these zones? As you can see, we have the red and we have the green. And this is an H1 chart of McDonald's. So how are we going to trade this McDonald's chart? As you can see, the sellers took control of the price and started pushing it downwards. They kept on pushing it downwards until it reached this major zone. As you can see, prices tested this major zone the first time. So what we have to do, we wait for prices to test this zone the second time. As you can see, the prices pulled back and tested this zone the second time. Let me zoom in and see. Let me zoom in. As you can see, prices tested this zone the second time and formed an engulfing signal and closed above the T-line. So when we see prices closing above the T-line, this yellow line is the T-line, we get ready to buy. So the moment prices close above the T-line, we place our buy trade here. Then we place our stop loss below the zone. The stop loss is placed below the zone. As you can see, the prices pulled up like crazy. They pulled up like crazy. So our target profit should be 1 to 3. We target a 1 to 3 while we are trading this indicator. We target a 1 to 3. As you can see, the trade worked out very well. So guys, let's take a look at another example. You look at this chart. This is an H1 chart for Zoom. As you can see, the sellers took control of the price and started pushing it downwards until we reach this zone. Let's zoom in and see what I'm talking about. Let me zoom in again. So as you can see, prices we are pushed down and reached this zone and tested it the first time. As I said, we wait for prices to test this zone twice. Prices pulled back and tested this zone the second time, forming a morning star signal, which is a powerful candlestick buy signal. So, and closed above the T-line, which is this yellow line. So we place our buy trade here. The moment the morning star is formed and closed above the T-line, we place our buy trade here. Stop loss below the zone, and our target point, we target a 1 to 3. As you can see, prices took off like crazy. Prices took off like crazy after testing this zone the second time. As I told you, this zone is very powerful. As you can see, prices took off. So guys, let's take a look at the sell trade. Let's flip to the next chart. As you can see, this is US ZAR or US South African Rand. As we can see, we have this trade zone, but was not tested the second time, so we don't take this trade. But As you can see, a new zone was formed here, right here. They tested it the second time, prices pulled back and tested it the second time. Let's zoom in and we see what I'm talking about. Let's zoom in again. So as you can see, prices tested the zone the first time, then pulled back and tested this zone the second time, then tested this zone the second time. As you can see, we don't take the trade immediately until the prices close below the T line. As we can see, we had a series of dodges until we had this candlestick sell signal. This is a doji sandwich and close below the T line, which is the yellow line. So what we do in this situation, we place our buy trade here, then our stop loss above the zone, then our take profit, we target a 1 to 3. As you can see, prices continue pushing down, pushing down, and it was a very powerful trade. So guys, you should get this indicator and try it yourself. It's so powerful. It works on all time frames, it works on stocks, it works on forex, it works on indices, but it's more powerful on the H1. If you really need this indicator, you should click in the link in the description. You'll be getting this indicator. You should try it yourself, backtest it and see how it's powerful. So guys, I'll see you next time. As always, invest safe.